Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Oh, that's what it was. I'm like, something's not right. The microphone doesn't quite sound right to me. Now that I've got it on here, does it sound good to you? Does it sound good to you? It sounds like a little off to me. Anyways, let's go look at the markets. Vivia says no in capital letters. Okay. So yesterday we had the Treasuries move a big time on the JOLTS job openings report. They moved up quite aggressively, but I mean, that was already after quite a bit of upside movement in the Treasuries. And now today we got the ADP, which also came under expectation and was more dovish than anticipated. Now, that should cause flows to push the Treasuries up. The problem is that they're already pricing in like 4 rate cuts next year. So I have to talk about how we deal with that, because I think that the flows and the fundamentals are kind of out of whack with each other right now. Now, over here in the S&P 500, they've been reacting very positively to all of this as well, but they are still extremely constrained by gamma and all of this sort of stuff. So they're not really moving all that much. I mean, look at this range. This is an immense mess. It must really suck to be a equity index trader right now if you're looking for trend trades. Okay, oil continues to languish after the output cuts, which is a little concerning to me that it's coming down so hard. Gold and silver just kind of going sideways after getting smacked down hard earlier in the week. And we got copper also going with the other metals, kind of struggling here. When we come into currencies, so I kind of changed the screen. The dollar is down here in the bottom. I guess I need to put my little watermark thing and make the watermark so that if I have 2 charts, it will show me both of these, but I digress. You can see here that the Japanese yen is not quite following the treasuries anymore. We have seen some periods where the Japanese yen falls and the treasuries stay up. So it looks like they have decoupled to some extent. Oh, sorry, we're getting the news here. Sorry, it is the US ADP. No. It is US trade balance and labor costs. Also a little bit weaker than anticipated, and we're moving up, but not too much. So we can finish this. Anyways, the dollar has been getting stronger, but not like too crazy. Up into the 104 area. And we got Bitcoin. You know what? I should get rid of the synthetic dollar on this one and just... Oh, why is it doing the scan now? I'm gonna fix that. Move that one. Okay, now we get Bitcoin. Bitcoin taking some big leaps yesterday. I mean, it already started out this week. Pretty wild up move, but now it's really going. Bitcoin, it's kind of looking like there's another mania coming. We'll have to talk about that as well. So let's come back over here to our main screen. So the issue that I see right now is that the market is currently starting to price out like 4 rate cuts. Can we actually let's look at that. Let's go pull up the Fed tool, shall we? See me room. Or they're moving up again. I don't know if I want to be participating in that. I'm not quite sure I understand why the data that we just got, trade balance 64 spot 3 versus 64 spot 2, labor costs revised -1 spot 2 versus negative spot 9, productivity revised 5 spot 2 versus 4 spot 9. That's good. I guess maybe a small move up is maybe in the cards. Oh, that's not what I want. CME group. Oh, I won't have it on here, so I'm gonna have to go here. Markets, interest rates, tools. Why is it called SOFR Watch now? Fed Watch. Okay, so current rate is 5.25 to 5.5. They're saying in December 97% chance that they will do nothing. But if we go to next December, and now all of a sudden, nobody thinks that we're going to be 5.25 and 5.5. And the one that has the most is actually saying that they're going to do 1, 2, 3, 4, 5 cuts. So the market is pricing 5 cuts in the next year. Let me tell you something. There is no way in hell that the Federal Reserve is going to reduce interest rates 5 times in the next year without a recession. There's no way. If we are getting a quote-unquote soft landing and there's no recession, there is no way they are going to reduce interest rates 5 times. So what we have here is our favorite situation, one in which the current flows are pushing prices far away from what true fundamental value probably should be. And that can provide us with lots of opportunities. And so what we kind of need to do is be on the lookout for when we get something that is going to start pushing flows back in line with fundamentals. I'm already seeing people out in the market and in the commentary and so forth starting to point this out, that like the current market pricing is kind of a little bit silly. I think that a lot of what's going on here is the CTAs. Like this move that we had back up here in the treasuries, if I come to like a daily, like this whole thing, like through the whole month of November, was extremely jarring. And this move down was extremely jarring. There are a lot of CTAs out there. Okay. Another thing that's going on that I need to keep in mind is that there are a lot of people out there that are short the futures. Even now, even after that huge leg up, there are still a lot of people short the treasuries with a basis trade. So that gets a little scary because at some point they run out of margin and then like crazy things happen. And we have been seeing some things in the short-term lending market in the past day or so to provide some concern. So how the Federal Reserve would react to that, I don't know. I guess just pump more money, but then that makes the problem worse. I don't know. It's a wild one to think about. But just keep in mind that you could see some wild and aggressive short moves if you get anything that kind of contradicts the current market pricing. Okay. Now, the other thing that I see is that Bitcoin is just going absolutely bonkers. And frankly, it's not just Bitcoin. The people on the GameStop forums, they're going crazy. It's like all of the meme stock stuff is going off. It seems to me that this group of retail gamblers are a different breed, and they hold. They hold, and they've been able to hold on for a long time against all logic that would suggest that that's not what you want to do. And the result of that is that the froth in the market comes back very quickly. So not only do we have a situation where I think that the market pricing is very, very off right now, But you're also getting a situation where at some point, I think the Federal Reserve is going to have to push back against it, and quite aggressively. So the more up that these treasuries in these markets go, the greater the chance is that the Federal Reserve has to come in and be like, actually, we're going to raise interest rates. Probably won't happen in December. That would be a bridge too far, but maybe in the spring, if this keeps up in the spring, they might have to raise the rates. Totally happen. Yeah, the Fed needs to step in and stop the madness. Market can handle another rate hike, probably. Although the one concern that I kind of have with that, James, is I remember we were all there 2022, right? Were you there in 2022? And we were saying this is crazy, especially in housing. Housing was the one that I was like, how are they letting this happen? And the Federal Reserve held off because of the Omicron variant. The Federal Reserve, because they operate on such a high time scale, like it takes months for their changes to have any kind of effect whatsoever anyways. I kind of feel like it makes them a little bit lackadaisical. They don't come in and are like, oh, well, we absolutely need to do something about this like right now. Their mode is kind of like, let the market sort it out. And when we're ready to raise interest rates, we'll do it, and that'll bring things back in line, and yada, yada, yada. I don't know. So I tell you what, just from the order flow that I'm seeing so far, and I'm not paying like super close attention to it, but we're getting some choppy action here. There have been some big orders and clicks and so forth, pushing treasuries both up and down, although looks to me like it is more stacking and pulling on the offer. So there are some big players at work here today again. Yeah. Now on the Bitcoin thing, I kind of wonder what... So we still have my indicator, my Bitcoin valuation metric. And it's still as interesting as ever. Let me tell you what. And I don't post very often, but we do have the Patreon. Kind of what happened was after we had a very, very consistent audience. And then during the pandemic, people, their budgets got squeezed and stuff, I guess. And a lot of subscribers dropped out. That was before Bitcoin took off. Was kind of interesting. So now there's only like 3 subscribers left because I never push it. I kind of was like, I'm sick of this. I don't want to push and advertise it. It's, now cryptocurrency is coming back, and it kind of suggests to me that you're starting to see the beginning of another run in a situation where the valuation metric says that the market is already way overextended. So that's a little bit scary to me. And I don't know if it's, should I just continue to be like, I don't care, I don't want anything to do with the crypto community? Or should I share more of this stuff? I suppose that I could make more content about the indicator. I could keep the Patreon, but, it not make it such an exclusive thing, Like, yeah, you're subscribing to it, but you don't need to pay for it to get the information, sort of a thing. I don't know if that'd be fair to the people that pay for the thing, though. I'm just not sure what to do. My current thinking is like, do nothing. People are dumping dollars and buying assets. I mean, maybe. The thing is that we definitely saw that at the beginning of the week, and then gold got smacked down. And I'm very suspicious of anything in the cryptocurrency market. I kind of think that the cryptocurrency market is like 3 guys buying it. It's like Michael Saylor and then 2 or 3 players that are getting loans from Tether, and they're getting loans from Tether and then buying Bitcoin with it. And I think that that's responsible for almost this entire run. So, like, if you knew, the whole thing is if at the time you knew that Bernie Madoff's fund was a Ponzi scheme, would you still have invested in it? Like, would you have invested in it? And then at what point would you have tried to get out? So there were people that did that. There was some really smart hedge fund guys that they saw what was going on and they invested in it and took their money out. And a lot of people suspect that they must have known that Bernie was running a Ponzi scheme and just tried to take what they could, you know? Would you be the one? Would you play that game? This seems like a dangerous game to me. I can't get over that the microphone sounds a little bit different to me today. Does it sound okay to you guys? I should maybe just come in here real quick and... I mean, the music sounds okay. It was just me, it sounds a little flat. Let me restart my audio engine here. That will help a little bit. Sounds good and normal to me. The dollar is much higher in just a few weeks, most likely. Dollar will be a good place to watch, that's for sure. We had a tremendous leap forward in economic science. Can't see a recession happening in the last 6 years. We had 9 recessions. Out of those 6 happened in the first 30 years and only 3 in the last 30 years. Well, yeah, but that's because of easy money policy, not because of the advances that we've made in economic science, unfortunately. And the whole thing is like, is the monetary policy easy? Because it's kind of funny because what you're getting in the market right now, it's really hard to kind of see it because a lot of the data points that are kind of showing this aren't talked about very much. But what you're getting is a market that is, or economic conditions, let's say, that are both tight and easy. So it is tight in that we are doing quantitative easing and we do have relatively high interest rates, and that's putting the squeeze on a lot of things. So from that perspective, it is a tight money environment, and that is what most people are experiencing, right? Like when you look at economic sentiment numbers, there's been this stuff that's like, okay, the economy is doing really good, so why does consumer sentiment continue to be low? Well, you have to go and look at how consumer sentiment is calculated, because that survey is mostly like, is now a good time to buy this thing? Is now a good time to buy this thing? What do you expect prices to be higher or lower in the future about this? And that's how consumer sentiment is created. And so what you're getting right now is you're getting people that are doing okay and are able to can keep up their spending, but they're not happy about it because everything is just more expensive and they just feel more squeezed than ever, right? Then on the split side, there is this whole thing with like Silicon Valley Bank and so forth. And so the Federal Reserve actually did kind of pump money into the system to keep regional banks up. And Joe Biden continues to spend like deficit spending from the government and putting a lot of money into like government workers and stuff like that. And so that's kind of stimulating the economy at the same time that we're trying to squeeze the excess out, right? What are you saying here? I hate how this little heart sometimes. Yeah, the data we get now is all suspect compared to the past. The data that we get from the BLS is definitely suspect. Absolutely agree with you on that one. But I think that some of the things that we're getting, the reason why they're so confusing, I think there's 2 reasons. One is that there is a lot of government spending out there right now. That's Bidenomics. So while we're being tight over here, the fiscal policy is still kind of loose. And then the other side of it is that the data is lagged. And we know that like the effects of interest rates are lagged, but it's starting to turn out that they're like a little bit more lagged than we thought. Like we thought, okay, we raise interest rates, we should start to see the effects of that and everything around the October, November timeline. And that is a seasonally weak time of year as well. And so we did see some of that weakness, but it wasn't nearly as much weakness as we thought it would be. And now you're into the, run up into the year end, which looks like may end early, by the way. I'm a little concerned that like S&P 500 may not be able to keep these gains past the expiration, but let's see. But now we're kind of saying like, oh, the weakness is going to come and it's going to be like in March, and that's when the Federal Reserve is going to have to reduce interest rates. It could, look, it could turn into a recession. Like the data that I'm seeing right now does not say we are screaming for a recession. The yields are, and I think that the jobs numbers are consistent, at least with a market that is starting to head into a recession, perhaps, right? Like you see here in December, let's just say that Friday the number is weak as well, which I kind of, originally at the beginning of this week, I think that we might get a December number that's stronger than we anticipate again. But let's say that we don't. Okay, the market will take that in stride, but then if you get like bad numbers in January and February too, that like can really shift very, very quickly into actually we are going into a recession. Like that's the thing that can really jolt you about recessions is that market bottoms are an event. Like they happen in one day, and like you can often see the exact moment when it happens, and all of a sudden, like everything just changes, right? Market tops are kind of a process, and what happens is, by the time the market top has happened and you're realizing that it happened like months ago, and then all of a sudden it goes from, oh, this is just a pullback to, oh wait, hold on a second, this is a recession, right? And it happens really fast. That's usually the way that it goes. Because if it was something that everybody was anticipating, then how would it happen, right? Everybody would protect themselves against it, so it can't happen that way. There's some people on Discord complaining about getting messaged by scam users, but looks like this one was banned by Discord. The Discord scammer thing is really annoying to me. I'm glad that they introduced permanent usernames so that I'm the only speculator Seth, and that if their underlying name is not speculator Seth, that they're not real. But people still get a lot of messages, and this is true of anybody that's on a public Discord, unfortunately. So the action here is a little interesting. We moved up pretty aggressively after the 630 news, dumped all the way back to 28, kind of seemed to build a base, and then broke back up towards the highs, and now are kind of doing the same thing there. So will this one break out, or are they going to do the same pattern? Well, I'm not seeing anything too interesting volume-wise. But there was buying going up into this. It's like it's kind of subsided, so I might have to wait. I don't think that this is one that I could really trade effectively. I do see the Japanese yen seems to be tilted on the long side as well, so I don't think the yen matters as much to us, but we still need to keep an eye on it. I guess I can recenter here. It does look like the ZB is really pushing strongly again. So maybe we're getting some market flattening. Well, let's check Twitter here. See if there's anything we missed this morning. What's Elon Musk going on about? Posted a weird GIF that's too small for me to even see. Wait, maybe if I open it up. Picking up and identifying a legendary item during the buffet. Yesterday, I saw a report where these guys were given in the addresses that Tether uses to take in interest payments. And they're only able to provide a little bit of information, but what they did was a little wild. Because it did suggest that, like, yeah, they've given out loans to people, and those people are paying those loans back in cryptocurrency. But those people appear to be taking that money and just buying Bitcoin. So it's kind of like if the company, if a company uses their own shares as backing for a loan, and then use that loan to go and buy their own stock. That's basically what they're doing. And it was basically, it says like, oh yeah, they were receiving interest payments and everything did kind of track pretty closely to what Tether says until 2022, which is right about when we expect everything kind of went wrong with the Alameda and FTX and all that sort of stuff. So it's just further proof that Tether is completely insolvent. And you're seeing stuff on people, the anti-crypto people on Twitter talking about that this morning. But not a whole lot else from Twitter. It does seem that Twitter is getting quieter and quieter. I don't think that there's a viable alternative, but it's getting quieter. Let's seem to Leb talking about. The arrow history is a bumpy but inexorable move towards more fairness and more liberty. But there are significant situations in which these two ideals conflict. The arrow of history is not necessarily theoretical. One can empirically detect the direction by looking at what does not revert easily, sort of like entropy. Consider gender equality, the right to vote, removal of slavery, racial discrimination, apartheid, etc. Now look at the Palestine-Israeli problem in the light of the arrow: colonization, apartheid, occupation, discrimination, and you'll see why colleges are increasingly sympathetic to the Palestinian plight, and it takes exponential energy lobbying to fight the trend. I don't understand what he's saying here at all. What I will tell you is that many people believe that the whole woke trend at universities was something that kind of started with critical race theory and Black Lives Matters movement. But I think the reality is that these theories were developed in part for the academia to explain why they think that Palestinians are victims. And the whole philosophy was actually built around that. And they were just kind of trying to rope in BLM to try and recruit them to the cause, but that ultimately that this was always about Palestine, which is why when you had the big thing happen, you all of a sudden you see the left so triggered about it and supporting the Palestinians, even though just an absolutely horrific atrocity was committed, right? So that might help you understand some of the things that are going on and where these politics are going. From where you watch this watch, what are you talking about? It's time to short Bitcoin when CMB starts bull posting again. Unfortunately, I think that there's probably going to be a little bit more of a bull run before they put a stop to it. It seems to me that price is manipulated. They're probably going to continue to manipulate price up until the federal government does something. So like I said, this is just like Bernie, you know that Bernie Madoff is a Ponzi scheme. Do you still invest in his fund and try and take money out before the feds come and take it down? Seems risky to me. I don't want to be involved in that. From where do you watch this chart? I watch well, first of all, I don't really look at the charts very much. And I do it from my chair. Or are you asking what software I'm using? So I'm using Jigsaw Day Trader. And I'm using NinjaTrader 8 for the charts. Well, they did move higher, by the way. So like we kind of got that sideways a little bit, and then another bull run comes through. How much is it? Oh, it's about 10,000 contracts. Jeez. These flows long are a little difficult for me to watch because I'm just not on board with the long, and I can't really predict these flows, right? Like I might be able to come in and say they're probably going to continue buying today because ADP was a little weak. But like the timing and amount and degree of it and everything is not with the usual kind of timing and so forth that we like to look for. So that kind of suggests to me that the people that are buying it are really FOMOing in. These aren't like methodical high time frame players that are price insensitive and yada yada yada. These are people that they need to buy it now. You can see that they're leaving a pretty they're kind of having trouble continuing to push because they keep getting sucked down from the liquidity hole. That's because they moved up before the market was actually ready. Doesn't mean that it will come back. Does kind of make you a little bit more vulnerable to a reversal though. Ah, there we go. Mr. Bond says that a recession is happening. But are you making that assertion based on data that you're seeing in the economy? Or are you making that assertion based on the market pricing? Because when I look at the market pricing, yeah, it seems like that the bonds are pricing that the economy is going to go into a recession. I just warn you, if that's what we're doing, I just warn you, the bonds are wrong all the time. I know that they're like the smartest market in the world and everything, but remember, it was the bonds that were like, nah, the Federal Reserve's never going to raise interest rates, and was slow on the rate actually happening. And then they didn't go nearly far enough, so like, then we had this further push this year where bonds sold off like super crazy, and they way oversold. And then they were kind of late to when bonds revert. So I don't really trust them to tell me if the market is going into a recession, you know? Wow, you lost 4,000 on a trade in the US 30? Okay, well, so first of all, maybe trade sim for a while, yeah? Because, man, you'd have been holding multiple contracts very much against the trend, right? I feel like no. So let's walk through yesterday. What happened yesterday? Yesterday, if you came in here onto this stream early in the morning, you were here in the beginning of the stream. What did I say? I said, well, all that matters is know what's going to happen. So if you know what the Jolt's jobs number is going to be, then you should go for it. And if you know that there's going to be like a big miss or a big beat, because once that number comes out, that's going to be all that matters. If we have a miss, they're going to buy this, like they're just going to buy it. And we might not be able to participate. We might not know which price to catch and how far it's going to go and everything, but it's going to go. And it did. So as soon as that number came out and we saw that the Jolt's jobs numbers was like a 6 sigma miss to expectations or whatever the deal was, okay? Absolutely no reason to go short bonds at that point. You are crazy. I know there are some people that they catch these pullbacks and everything, but I don't want to be taking that. At that point, I only want to buy long. At this point right now, it would be very, very difficult for me to justify a short trade in the treasuries. That's why because I would rather go short. I'm just not seeing the support in the flow and the macroeconomic context for it to work. So I'm just sitting on my hands. We had an ADP number that was also weak. If there could be pullbacks and stuff, you might be able to make a little bit, but you're fighting the trend, man. And this is not a technical thing. This is an informational. I wouldn't even call it an informational inefficiency. It's a piece of information that everybody knows. Like once that number comes out, almost everybody knows that you don't want to go short this thing, right? And if you don't know that, then you probably shouldn't be trading live yet. Okay. So it's not a technical thing at all. Technical thing might tell you where's a good spot and maybe a good time to get in and so forth. So we are getting a pretty strong liquidity hole here at 20. That would be a good place to take profits, place where they might pause. Doesn't really look like they're too interested in stopping this crazy rise though. Market may be wrong, but bonds are attractive versus equity if you believe a recession is happening. I don't know, man. Like, I do think that the yields for the next 2 years would be attractive. Not even if it was a recession, but even if growth in the S&P 500 was going to be weak, right? It would be. But the problem with that is that the market doesn't think that that's what's going to happen, actually, right? The market thinks that the Federal Reserve is going to reduce interest rates 5 times, and throughout all of that, the S&P 500 is just going to keep moving up and pushing to new highs. Like, it really doesn't make sense when you start to think about it, does it? It really doesn't make sense. How can you have 5 rate decreases while the stock market still continues to be strong? The Fed will not be able to do that. You will get inflation if you do that. You will absolutely get inflation if you do that. You might be able to do 1 or 2 rate decreases as a like normalize things, and then you should see we'll have some weakness that kind of evens back out, and then you get the soft landing, right? Yeah, you're fighting against the market quite super trade. I think one of these things is you got to remember there's the fat tails, right? So because of the fat tails in the market, those data points matter more than everything else. And so getting the fat tail correct matters more than almost everything, almost no matter what your strategy is. If you have more variance in your strategy, then the fat tails aren't going to hurt you as much. But you still got to get those right, man. Because that's going to be the difference between just kind of making a little bit of money and trotting along, treading water, and really getting some performance that you're proud of, right? It's like, I know that I've used this thought experiment a lot lately, but I think it's a really important one for traders to think about. Would you rather be the guy that trades and makes money every day for a year and then loses it all in one day? Or would you rather be the guy that kind of treads water and doesn't really make any money all year except for the very last day, and he makes more money than all the other days combined in that one day? Who would you rather be? Because one guy at the end of the day has some money and one guy doesn't. Right? I missed the news, so what is it? Well, so it's clearly long, but I am a little hesitant to try and jump on board this train because I do think that it's a little crazy. But the ADP numbers were weak. So the US ADP employment change was 103 versus an expected 130. So I think it does justify some longs. I want to throw a little bit of cold water on it because that number in particular has not been very indicative of what the Friday jobs number is going to be. It is still entirely within the realm of possibility that the Friday number completely cancels out all of this, and we get shoved down to the week lows on Friday. Still within the realm of possibility. Probably less likely to happen now. But like I said, ADP lately hasn't been very indicative. So also get jobless claims tomorrow. It doesn't look like a strong trend day to me. Well, I mean, that's a pretty strong trend. But I agree with you. This does not look this looks to me like a double distribution. This looks to me like you had a distribution down in here before ADP, and then you've gotten some pretty consistent buying, and now they're distributing out here. I definitely wouldn't be... I'm not going to short it. I'm not going to short it, but I find it very, very difficult to buy up here. Find it very difficult to buy up here. I'm missing out on a lot of action, but if I can't predict those flows, then there's nothing I can do about it. One of my problems, I think, right now is a bull market in bonds is very different from a bear market in bonds, you know? And I'm probably a little bit too used to the bear market. Need to adjust again. If you have 5,000 and 5,000K in risk capital, bet it all on some... No, why... What you want is you want a strategy that has a decent amount of variance, but an actually a good edge, and every once in a while catches you far right tails. That's what you want. Most traders, they do something like this, where there's hardly any variance at all. They make a little bit of money every day, and then they run into the fat tails and they lose it all. That's what most retail traders are doing. You go and you see those guys that they're like on other streams, and it seems like every day they're making money. Like every thumbnail has $1,000 on it or something that they made that day. That's what they're doing. They're taking on a lot of risk for a tiny little profit, and then when their strategy stops working, they blow it almost within a day, a week, if not a day. And then they might even be totally open and honest with people about that happened. But the thing is the audience forgets. And then they refund and they just do it again. So you need more variance. You need more variance to reduce your left tails. And keep yourself exposed to far right tails. That's another thing. It's like some people will say, okay, if I make X amount, then I'm done for the day. Don't do that. Let your right tails go. Let your right tails run, I guess is what I should say. Yeah, be careful, because sometimes the market just fattens you up. Sometimes the market goes, oh yeah, we'll let you, yeah, you can have that one, you can have that one, you can have, and then when it matters, all of a sudden it doesn't work, right? They're fattening you up. They're fattening you up, and then when something is actually happening, they slaughter you. Pigs get slaughtered. Well, that was a decent pullback in ZN, although I would say that 111 was still kind of like a breakout point. So this is actually an area that you're probably going to see a lot of people looking for some support. Let's see if it actually happens. There is a little bit of stacking there at 0.0 which makes me suspicious that somebody's trying to push it down through there so they can get their fill. So let's see what absorbs as we push down here. Going to be paying close attention to absorption in this area to see if it's absorbing or if we're going to have correlations just the outright reverses back down here. Well, let's come over, do our little news runs. It's 7:13, so 15 minutes before ES Open. Biden administration has been seeking out high-value Russians for potential prisoner swap. Okay. Equity investors should start contemplating risk reduction strategies. Bond investors are the ones that should be giddy. That kind of suggests a recession, right? You're on CLF4? Wait, why F? Hospitality jobs tumble for the first time in 3 years as ADP disappoints. Let's read about the ADP jobs numbers, shall we? After ADP has printed lower than BLS for the last 2 months, expectations were for a small tick higher in November, despite the ugly jolt sprint. However, ADP just reported 103 jobs added, and October was revised down to 106. Manufacturing saw the biggest job losses, but leisure and hospitality lost jobs for the first time since February 2021. ADP's chief economist, Neela Richardson, notes that restaurants and hotels were the biggest job creators during the post-pandemic recovery, but that boost is behind us, and the return to trend in leisure and hospitality suggests the economy as a whole will see more moderate hiring and wage growth in 2024. And then Zero Hedge has its comment on Bidenomics. JobSayer saw a 5.6% pay increase in November, the slowest pace of gains since September. Job Changers 2 saw slow pay growth, posting pay gains of 8.3%, the smallest year-over-year increase since June of 2021. The premium for switching jobs is at its smallest in 3 years of data. Is this the recession signals the STRS market is banking on for 125 basis points of rate cuts next year? Because stocks sure aren't thinking recession. You know what? Yeah, but January is... Oh, is January F? You know what? I've got my stuff all messed up. You're right. January is F. For some reason, I was thinking it was H. What are we on over here? H. Oh, right. That's March. March. And February is G. So January is F. Yes. I memorized the codes and I've already basically forgotten them. Seems way harder for me to memorize things these days. I need to try harder at those sorts of things. Man, I tell you what, is the trade to just wait for the options expiration next week and then go short the S&P 500 on a recession? I don't know, man. I still think that, well, I think that maybe the probability of a recession is higher than what the equities are showing because of this volatility selling. But I also think that the Treasury market, the STIRs, are getting way, way ahead of themselves on pricing 5 cuts next year. So I think that both sides are kind of not in line with fundamentals. So I got this new chair, and I really like this new chair, but there's one thing about this new chair that I don't like, and that is that when I bounce my knee, it creaks. Makes a sound. Yep. The expiration is next Friday. So I was looking yesterday. So you were all there. Especially, like Octavius, you were definitely there when I took that swing trade long in the S&P 500, right, on my sim account. And we could see it over here in Jigsaw for a while. But I went in there yesterday looking for it to say, like, okay, how much did this actually do? So I came in here and I just said, oh, no, I need to go like way further back than that. I know that it was, I don't know when I took it exactly, but I know that it was sometime in November. And I know that it was in MES, right? So if I refresh this and I look at MES, it only sees, oh wait, does it see 2 trades? No. See, here's one where, oh, is this the same one? Right, max quantity 1, all of these things. So that's not the trade. Like the swing trade that I took, the system just said you've had it open for too long and killed it and removed it. It's not there anymore. It's not there anymore. And that, weird. So now I'd have to go back and watch the streams to see what price I was taking and how much I had made. Because I think that somewhere around here I'd be closing it. I guess I'd probably be waiting for the jobs number on Friday. Probability is probably that the number is weak, but you never know. Market has a strange way of surprising us, of setting us up and surprising us. And then as soon as I think that I've got it figured out, and that's the pattern, and then it will surprise me the other way, right? I don't know if I have very good information to really suggest that the jobs number on Friday is going to be good or bad. I do think that the risk reward is probably tilted towards the report being better than expected. I think that the market is like really, really poorly positioned for that to happen. If it came in better than expected, that would be like a real shock to the markets, and they would have to they would basically have to readjust their whole thinking from the past week, right? Anyways, I think I close it tomorrow, but I can't actually close it because it's not there. It's not there anymore. It's gone. Yeah. And I have show open trades. Oh, wait. No. Oh, wait. Maybe that was not showing open trades? Oh, there it is. That's it right there. That's it right there. Okay, so my average price was $45.19. Oh, that's a good price. That's a good price. Only one contract running though, so. Yeah. Made 2 times what my win would have been. I don't think I closed it yet, but then here's the thing. How do I close it? How do I close it? There's nothing over in here to close it. Fill. All fills. I can see all the trades that I made in it, but there's no way for me to close. How do I close this? And it also says that this one is open. Let's take a picture of it and put it in Jigsaw. Yeah, let's put it in trade chat. Actually, so one thing I can do, oh wait, did I already close it? Shoot. Control Shift T maybe? Yeah. Okay, let's fix that again. When did I open it? I opened it on the 16th of November. So if I come into this and I go back to the 16th of November, nope, doesn't show it. Now one thing is that it is on Sirius. Oh, no, but I had this on Sirius too. It still just doesn't do it. Why not take a live MES trade next time it is cheap? I don't know, because I think that to take that trade, I would have potentially have been risking like $100 or $200, and in my futures account, you know, I should probably fund more in my futures account and bring it back up a little bit, because it's been burning because of the data fees, right? Like I'm mostly break even, a little bit profitable, but I'm still losing a little bit when you account for the fees. because I'm trading super small, right? Anyways, it would be like 10% of my of the account, so I don't really feel comfortable doing that. Yes, but I would say that I think I gave a pretty good, pretty solid case there of where I do think that I can swing in ES. The issue with that sort of thing is that because each trade is so unique, it's really hard for me to be super confident on, you know, how much edge I actually have on it. You know what I mean? Because the whole thing was based on the seasonality and everything else that I saw for the flows going into the end of the year. Right. It's basically like we were going to see equities rally into the end of the year was basically the call that I was making. I don't always have such a predictive signal like that. Not even, let's not call it a signal, but I don't always have such good information, right? It's quite rare for me, you know, that's maybe once a year, if that I get one that's that strong. So sure I can. Now, I have been sizing up in the micros a little bit. It seems like every time I do it, though, is when I start having problems. It's like I start doing it, and then the market starts punishing me for it. It's really quite frustrating. But I've been trying to size, not based on my performance, but based on my market expectations. So I don't think that it will be appropriate to be sizing up in the micro treasuries until January again. Although I could be, you know, super wrong about that. Now might be the big moves and might be over by the time we get to January. Who knows? It sure is. Sure is going to be interesting to see how this plays out, because I see a lot of contradictions, you know. But on the split side of that, you can't trade one lot your whole life. I think I can, actually. I think I can. I think I would be perfectly happy with just trading one lot my whole life. I do feel a I don't want to say a desire, like I do feel obligated to size these up to a point where we are paying for the data fees too. Just to show people that it can be done and so forth. But beyond that, I'm not here to become a millionaire from it or anything. I just want to come in and do what I know it works and is effective. And the amount of money that I make from it doesn't really factor in. Because I've got other things going on that can bring me large sums, you know, that could make me a millionaire, essentially. Right? Like, if I'm really there to make the most money possible, I just buy and hold. You want to make the most money? Buy and hold. Okay, well, we are starting to see the treasuries get jostled around a little bit again. There was just a shove that pushed them up 3 ticks. Here right as the S&P 500 opens, though, so that might be why that's happening. What's this from Discovery Trading Group? Heads up, Treasury derivatives traders. I always say you better understand the underlying cash markets for whatever you trade. Here's your chance, my bro. Conks, the Uber plumbing illustrator, Mensch hits another one out of the park. Just demystifying the U.S. Treasury market. Okay, let's read this. But is it only for subscribers? No. Yeah, it is. And how much is this subscription? Okay, $10 a month. But he's got a picture. Ooh, I like this picture. Let's see here. The U.S. government goes to the primary treasury market, which are the auctions, and then they sell it to these treasury customers. They will also send it to securities dealers, which are like primary dealers like Goldman Sachs and so forth. And they will potentially be doing stuff in the futures market. And then there is the secondary treasury market, which is where you would probably deal unless you were buying it through Treasury Direct. And then it has the repo market over here. Okay. That all seems in line with what I know about. Wonder what else I would have in the post. Oh well. I don't think I'm going to subscribe. There's one of the problems I see here in the way that things are going is now it's like everybody has to have a subscription. Guys, I can only have so many services. It's starting to get a little crazy. You know? Like there are now websites and their whole thing is like we'll keep track of all of the subscriptions that you have and tell you which ones you can cancel and stuff. Like that tells you that it's gone too far already, right? It kind of goes back to my whole thing that was like I got the Patreon and I do still post for it for the 3 people that's still on the Patreon. Most of the Patreon subscribers came in 2017 and they stayed all the way with us, and then the pandemic they couldn't, everybody canceled it during the pandemic when treasuries fell. Because it was basically like, oh, see, I told you. And then they're like, okay, I don't want to watch cryptocurrency anymore. And they unsubscribe. So now I'm like, what should I do with it? Do I just keep posting for those 3 guys? I guess I could. I could go balls, deep into it again and start trying to promote it and try and get the cryptocurrency people to watch it and so on and so forth. But I don't really want to do that because I don't really like the cryptocurrency audience. I don't like that audience. They're annoying to me. But then on the other side, I do still feel like we have like valuable information that I wish was out there, so like I'm kind of so with a lot of things. I'm kind of in this middle ground between I want to do something and I don't want to do something. And I probably just end up sitting on my hands and not doing anything. I am getting some that sideways action in the 10-year. Yeah, it seems like the latent liquidity in ZN at 01 half is damaged, even though there was some jostling around there. It's been a while. Like if we say the move up kind of subsided at 7 o'clock, maybe 7:10. Now we're 20 minutes past that. So maybe another 10 or 15 minutes and we would be recovered for another move. But I'm not so sure that we would get another leg. I don't think today is a day where I should be expecting a second leg. I think that when they moved up, it was kind of a little impulsive. So I don't know if that sort of, I don't think that these are super high time frame players that behave in that way. I think this was kind of more FOMO. So if this was FOMO and those guys are done buying, it may just not be a good trade anymore. Judge denies Jack Smith's request to conceal documents in Trump classified materials case. Okay. Good for Trump. Still not. Let's go to Reddit, because I don't see this getting better anytime soon. Oh, now this will be interesting. From r/Butcoin, why is there such assurance that Bitcoin is poised for a massive bull run? Since Reddit is good and sending me down the rat, I keep seeing more and more posts about the Bitcoin bull run. Why are these highs so sure it's going to happen, or are they just pumpers? A huge part of crypto is about number to go up and generating hype that number will go up. Bitcoin, yeah. When it goes down, it means time to prepare for when Bitcoin shoots back up, and when it goes up, it's the bull run is on. None of it is based on any kind of real analysis. Yep. Remember when you were 3 and Santa Claus was real? Remember when you were 4 and Santa Claus was also real and a lot of fun? At 5, there might have been some doubt as there were rumors. Then you turned 6 and you didn't ask questions because presents from Santa kicked butt. Then you turned 7 and you might have asked some hard questions but didn't really want to listen to the answers. And then 8 hit and you realized it was all fun but also make-believe. The public at large is turning 8 metaphorically this year. The media sees it now for what it is, a Ponzi scheme, so expect no reputable media giving it anything but negative accurate coverage. Expect most people to view it as a joke. It's not news, so tech-savvy people don't care about it. The only mainstream news that crypto generates is from trials and problems. Okay. Yeah, so I'm going to say, if you knew that Bernie Madoff was running a Ponzi scheme, would you still invest in it with the hopes that you could get out before the government figured it out? Before the government did something? There was some people that made big money from Madoff's fund after all. You knew that Bernie Madoff was running a Ponzi scheme. Would you still invest in it with the hopes that you could get out before the government did something? There were some people that made big money from Madoff's fund after all. Seems to me that's the game everyone is playing. They know manipulators will pump the market up, and they all just think they'll get out before it crashes. That's what I think that's happening in crypto. Okay, if we see aggressive buyers come to market, how can we recognize it's buyers coming in the market or sellers getting out of their position with a loss? Good question. We can't. Yeah, probably not the answer you wanted, but we can't actually know that. So there is something called open interest. And there are some exchanges in Asia that will give you minute by minute open interest so that you can see after 5 minutes, has the total number of positions increased or decreased. So then you could see if aggressive buyers come in and buy this up, but you see open interest decrease, then you know that that was probably either shorts getting stopped out of their positions or longs taking their profits, right? If every order was like assigned a trader ID or something like that, then you could track the positions of individual traders, and then you could really know if they were like new position or getting out or whatever the deal was, right? Well, we don't get that data. All we get is a volume at a price and what the best bid and offer was, and then we would determine which order was the aggressor order based on that best bid, best offer, right? And that's the best that we can do. So we can see, is there more market buying or is there more market selling? Now, here's the thing. As far as I understand the market, all orders have the same kind of impact, right? It doesn't matter why they're buying it or why they're selling it. All that matters is what the balance in the interplay is between the market orders and the limit orders, the 6 fundamental forces. So it doesn't necessarily matter that it's people being stopped out of positions. I know that we really want to see it because maybe we think we can find some sort of consistent behavior in where people set their stops so that we can predict where the stops will be and play into them. But I don't know if that's actually a winning game. Like if we were able to do that, then everybody would know that and they would avoid placing their stops in that location. So that would probably just, become random. Instead, I say you just want to know things that is going to predict future orders. There are some things about those future orders that you might be able to tell a little bit about how they're going to execute it. For instance, I'll tell you that if you've got a large block trader, they trade about 50% of it with market orders. So they're still going to be taking orders on the limit orders as well. So you can, once you know what the order flow is supposed to be, then you can watch the market and see if it's in line with your prediction or not, right? And that's the way that I would play it. But we don't have the data to know, are they getting in their position or not? Sometimes maybe you can guess, like if you see it take, especially in the 10-year, multiple prices all at once, there's not like some sort of news or anything like that. That's probably big people getting stopped out. That's when, as soon as you see volume here, you also see volume at the next price as well. That was probably triggered by stop orders. And those stop orders are most likely to be, because I don't think that many people stop into positions. So those stop orders are most likely to be people exiting positions. But that's just the guess. Yeah. How do you know which information will really predict order flow? This seems to be a lot whenever I open any news squawks. Like, oh yeah, well, that's good. That's a good question as well. So this is where I would come back to remember that your mind is or contains a neural network, just like ChatGPT. And the way that ChatGPT works is you ask it a question. You feed it all of this data first, right? You send it all of this data. So you take like all of Reddit posts or a transcription of all YouTube videos or something like that, and you pass that into that neural network. And that's the data that you train the neural network with. The thing that made ChatGPT special and was kind of the big innovation was that they would then have employees ask it questions and rate the responses. Okay, so what that means is you have somebody that knows the answer or knows what is a good answer, and then you do reinforcement learning with the bot, essentially, so that it says, okay, here's your question. Here are like 3 responses. You rate these responses and tell me which one is best. And then that neural network like adjusts, and that's how you get this thing that is able to give you very, very lifelike responses, right? So how do we apply that to us? Okay, what we are doing here as we're trading order flow is you're kind of using that neural network frontal cortex part of your mind. Okay, and what that means is you're watching the order flow and passing that information into that neural network, and then there are neurons in your brain that are making new connections and pairing connections and adjusting the calculations that they're making randomly until they get something that kind of appears to work, right? So if we want to have a really effective neural network, then what we need is we also need something that tells us the answers. So we need something that has that reinforcement learning. So what we can do is we can go and Zero Hedge or wherever it is, right? And we can look at all of the news, and there's a lot of different things that could potentially move markets, right? And then at the end of the day, you're going to review and you're going to say, okay, we saw this move. I think that move was likely to be from this or this, right? And sometimes you don't exactly know what it is, so you kind of have to just have theories. You can say, I think that the best explanation that we have for this particular move was this flow or this flow, right? And then as you get more information, you can kind of confirm or reject certain hypotheses. And after enough time, usually you actually get a solid answer. Like you will see something in the news, they'll report what actually it was, okay? And that's how you're doing the reinforcement learning. So come in every day, look at that information that, absorb as much information as you can, and then see what information actually moved markets. And over time, you will then develop that instinct because, we're not really very conscious of how that neural network works. We don't consciously understand it. We put the data in, and the neural network gives us the answer back out, and we don't completely understand how that happens. But you will develop that instinct about what's going to move the market so that you can know things like yesterday, hey, what this Joel's jobs report was is like the only thing that matters today, right? Was this? So that means yes, all orders have impact, and there's nothing about this order that, it's not like a stop order is like they can't even really see that it's a stop order. They just know that they got filled. They don't care that it was a stop. I guess maybe if it was a stop order, you might care that you got filled, because stop order might suggest that flow is not going to continue through. But we don't have any research on that. But from the perspective of like the market maker, orders are orders. The only thing that they care about is whether that order was informed or not. That's the other thing. As a stop order would not be an informed order, right? So you still kind of just treat it like noise. I think that you know, retail traders, they're so focused on, you know, how the market tries to fool you, and so you want to see when everybody else is getting fooled and then get in there and that sort of a thing, right? I mean, it kind of makes sense, but once you really understand like the market microstructure and the information that we have, kind of suggests that that stuff would not really actually be that useful to you. I don't think that stop orders have any more impact than anything else. I also would bet you that stop orders are actually more evenly distributed than people think. So we did have a pretty good like pullback / decline after that really, really long liquidity hole. We are getting back into the time period where like the, you know, liquidity is probably healed. So maybe that move down was a meta order short, but it didn't have as much impact because, you know, well, it just had regular impact because the liquidity was healed. But you're already getting like pushback against that particular move. So I think that gives us even less of a trade. I don't want to get in the middle of two big guys hitting each other really hard, right? If I did, I'm just going to take a teeny tiny little scalp between the two of them, right? Would you recommend applying to work at an investment bank to better understand how markets work? What was your experience like? Okay, so if you can get into an investment bank, absolutely go for it if your interest is in markets, because you can get a real job doing like real trading or like being really involved in the markets. Now, I think you might find that it's not as interesting as retail trading, but you're also, but it's better money. So it's like, right. You gotta realize that retail trading is kind of for those of us that mess up, right? I wanted to be a trader. I went and got a job at a bank, but then because of the way that my career went in technology, basically meant that there was no way they were ever going to make me a trader because I knew too much. So I didn't get that opportunity. For me to trade, I had to come and do it on my own, right? So basically something went wrong for me, and that's how I'm before you today. Now, luckily for me, the rest of my life has very, very much gone pretty great. I'm a site reliability engineer. That's a really, really good gig in this economy. Hopefully, if we do have a recession, we'll be fine. So we do CRM for car dealerships. That if there's a recession, that could be a little hairy, but I think that they'll probably be okay. But yeah, that's why I'm in. See, I'm an extremely unusual special case, right? Because if I had actually traded for them, I probably wouldn't be able to talk to you about this stuff, right? It was like I was close enough to know what to read after I left, but not enough that I can't tell you about it. Almost anybody else out there that knows about this stuff isn't going to talk to you about it. So, advantage Seth, I guess. But I would rather be a block trader than a retail trader. Retail trading is really, really hard. Being a block trader, they've already done the hard work for you, like deciding whether something is good to buy or sell, right? All you got to do is just execute it the most efficiently. I want to go long ES. Well, I don't know. I'm concerned that at some point this week that the ES is going to start, that the tension is going to be too much and they're just going to start selling. I mean, there's been a lot of that this week where there's been some pretty ugly downside moves, but then they revert and it's fine. We'll see if they make it to Friday before having something like that. Volatility is really tight though, so they're really clamping down on volatility. It's like Treasury's touching 11 there again. I'm not seeing like low liquidity there, but it is like they are acting like they just don't see any reason to move. So this one's maybe interesting. This could lead to a liquidity hole if they were here long enough, but this is actually more of a market that just doesn't see any reason to move, rather than a market that's constrained by liquidity problems. So just as an example right there, there was a 3K iceberg and they were able to fill it quite easily. Whereas when we get a liquidity hole, you shouldn't see that. It should just be like, it moves very, very easily. Very few contracts to move back and forth across that price. My background is in engineering. Would you recommend learning about data science, machine learning, or... Oh, absolutely. So, oh man, I wish I don't know how I would find this again, but I found this really cool tool where it showed you on the y-axis how much money you make, and it factored in the costs of like your education, and then another axis was how many people are doing it. And it was really funny to see how the majors that like the most people were doing were all like, you know, below average wage. And then there was some where you were just like objectively losing money after you factored in your education, like all of the liberal arts, dance and stuff like that. But when you look at it, I really think computer science is an outlier, which is to say, it's the best bang for your buck. You make the most money for the least effort, and it's not like it's not effort. It's just that like in order to make more than that, you have to start doing like crazy stuff that very, very few people understand, right? Like if you're a computer engineer where you're actually designing microchips, okay, then you could potentially make more. But you're getting into crazy stuff where you start to make more than the computer science guys. Computer science is your best bang for your buck. So within that space, yeah, I think that machine learning and data science is just only going to expand and continue to be a bigger part of the economy. So I think that is a good investment. And it can definitely help with your trading. I wish I knew more about that stuff. I know a lot about kind of how it works, but not necessarily all of the math behind it. I haven't applied it too much to my trading, to be honest with you. We have the machine now. I've been going through things. I copied over my documents and settings folder. I don't think that there's anything else on that computer that I need. So I think that this weekend I can wipe that machine and install Debian on it and set up a Kubernetes cluster, and we can maybe start doing some of that data science stuff. Versus going for an MBA. Oh man. Well, an MBA is like a totally different thing, right? Because there are a lot of programs where you go and you get your MBA at night and stuff like that. Now, the doors that an MBA opens up for you are also completely different. And that's one where it can really, really pay off for you. But it could also end up being, you don't do anything with it, it ends up being useless. So that's a tough call. There's also this thing that's like, is going for a master's worth it? So this tool that I was looking at, they kind of showed you like, here's a bachelor's degree and here's people that got like certificates and so forth beyond a bachelor's degree. And by and large, they did not make more money. By and large, they did not make a whole lot more money. So for most people, unless you're doing something that you know specifically requires some graduate work. Now, so for instance, if you wanted to work for a big investment bank doing block trading, for instance, doing a graduate program at a school that has a good quantitative finance program where they teach you some of this stuff about liquidity, and then you go and you do a project about that, because the person that I knew, well, not the person that I knew multiple people, but the one that, you know, I spoke the most about the trading part with, she had gone to a school and she had done a project on market liquidity, and that was how she was able to get the job at the investment bank. I mean, it's very competitive, right? So that's kind of the path that you take there. I don't know if you just go and get a bachelor's in finance if they let you trade, unless you have like really good connections or something, right? Well, we are getting the downside move that brings us back to the buyer's cost basis. So I could do something now. We do have an hour. But what do I have to predict order flow today? Well, we know that ADP news was a buy. We know that the CTA funds are still long, although I don't know if there's too much of them left. And now there's this new speculative play, which is that 5 interest rate cuts is crazy. So they're selling. So because of that, I'm kind of more interested in taking a sell, but I don't know if I actually have reason to believe that the flows will be more sell than buy. But if we come back over here to this chart and we look at the cumulative delta, they have washed out through all of the buying that we had for the session. So I suppose that this selling could just be all profit taking. But it also means that we could look for shorts if we want. I think I'm likely to still sit on my hands, but let's just keep an eye on it really closely, because maybe it will give me a hint that there's something else going on here. Like that there is a large meta order going short, or that these guys are getting aggressive. Let's see here. What's I actually got to say here? Computer science versus an MBA. A guy I used to work with once told me a new hire that go for an MBA if you want to fool around with a young college student and do it in a respectable way instead of learning. I bet. Well, as when I worked for the investment bank, I was thinking about getting my MBA, and I even went through and did all of the work for like getting a GMAT, doing the GMAT. Like I did all of the studying for the GMAT and never took the test. That's why when it came to the 65, and I was like, I don't know if I'm actually going to use my Series 65, but I'm going to finish it. That's why I was so adamant about doing it. It was proving to myself that I'm different now. I finish things, because as an ADHD person, you get these big ideas and then you don't follow through on them. But I've all of the videos that I've wanted to make, it takes me longer than it should, but I do them. And I'm doing the Series 3, and I'm definitely going to do that. But yeah, I was going to do the MBA. But, I got bored of it. I kind of was like, I actually don't think I want to get an MBA. I think that the things that I would have to do with an MBA are not necessarily things that I would enjoy. Like, it's kind of a conundrum, really. Because I do think that I have certain leadership skills that are really valuable. Like, I think that I have a good instinct on what my people need. And I think that I have okay instinct on how to motivate people, right? So we have a pretty good culture here on this stream. The people that come, you've been coming here for years now at this point. incredibly consistent people. How do you get people to show up that consistently voluntarily? Okay, that's not that doesn't just happen, right? We've done a good job with that, and those are some of the attributes, some of the things that I'm good at. But what I'm not good at is keeping track of all the details, right? Like the actual like clerical side of management. If I was a manager, I would be a very disjointed, disorganized one, and that would really, really hurt you. So I'm kind of more better suited as somebody that's like an entrepreneur that has big ideas, and they have a partner that is better at the actual getting things done efficiently part of it, right? And I don't think that that's an MBA. Right. I'm more like the college dropout. You start a business and then you pay an MBA to run the business for you, sort of a thing, right? Self-awareness is key. Yeah, well, you'll definitely develop self-awareness as a trader, right? I think that's one of the things that will lead to ADHD people staying in trading longer than they probably should. Because you'd think, oh, if they're ADHD, they're going to try it for a week and then it doesn't work and they're just forget about it, right? But I think that part of what happens is you do get a dopamine rush just from the trading that keeps you interested. And then, you know, one of the things that will drive people away from it is they start to learn things about themselves that they really don't like. But an ADHD person is used to questioning themselves and used to feeling inadequate and embarrassed, and so it doesn't really bother them, and they stick with it. And that's certainly me. Like, I definitely have strong opinions about things, but I'm also very, very much used to being dead wrong about it, right? Like, the thing that I find over and over and over and over and over again about markets is that I'll be 100% right about something. I'll be like, this is the thing that I'm focused on, and I'll be 100% right about it. And then something else will come along, and that thing that there was absolutely no way that I could have ever possibly have predicted is the thing that ends up mattering in the end and completely cancels out everything else I was worried about, right? Gotta be quick on your feet. So right now I'm sitting here like, well, the jobs number matters, but then like probably right after the jobs number, we're going to get something that's going to happen with the Federal Reserve meeting that's going to change everything. Or maybe the markets just do something completely wild after the Federal Reserve meeting. Right. We all have blind spots. But there's a lot of stuff that we just can't see, right? And there's a lot of things that we can see, but can we truly be confident that that's going to matter and move it? You know what I mean? But that's why those things move the market so much, is because those are things that almost nobody sees, right? Until it happens. Until it starts to affect the market, right? Like, there's this story yesterday on Zero Hedge about, like, they said that the canary just died, basically. So they're talking about going-ons in the short-term funding market, and that there was a spike in SOFRs, I think it was. So this is kind of the stuff that we were seeing before the repo crisis of 2018, was it? I forget when. Okay. So it's not like directly affecting markets today, right? But that's the thing, is that like everybody will ignore it until it becomes a big deal. And then all of a sudden when it becomes a big deal, it's like the only thing that matters, right? And if you happen to be one of the lucky few that were paying attention to that market and knew what was going on, then you know what to do. But, you know, if there was something similar happening in the oil market or something like that ended up having a significant impact on the market, probably wouldn't know about it, because I don't know oil that well. And it's a huge problem with the trading. It's like, okay, you don't want to trade against the informed traders if you're market making, right? But knowing when you're informed and thinking that you're informed when you've been misinformed is the biggest risk to us. And I think it takes a really long time to sort those things out sometimes. Train that neural network up to not fall victim to those as much. I can definitely see in myself how I do better. I don't have as heavy of drawdowns as I used to, because I'm much more aware of those risks and when I might not actually be as informed as I think I am. So I'm just kind of watching this. This is a little bit of a pullback here at 31. I'm kind of thinking that if they're going to continue moving down, that this is like the pullback that you might want to take. The flow on this most recent turn is pretty flat. But the flows from the longer kind of time frame, it was buying up until about 7 o'clock, and then ever since then it's been selling. So I'm really tempted to take the sell, I suppose. Okay, I'm going to take the sell on sim. I can always do it on sim. I'm just not sure if this is the best. So that 30 half is pulling and then stacking back on very quickly. It's a weird feeling seeing that the best performer in my portfolio is a utility stock. Jeez. It's not TLT? Wait, I wonder, we haven't heard from Uzi in a few days, but is like, what's the best performer in your portfolio this year? Mine, it keeps switching, but now there's a big order at 31. So I was not the only one that thought about doing this here. PCG. Oh, you know what that reminds me, by the way? We needed to add some stocks to our list. I think I'm going to put it under AI. I don't know if it's really an AI play, but ASML. They're the ones that make the big old machines. And then consumer, I want rocks. Okay, I got filled in the worst way possible. Liquidity on the offers still look pretty solid, though. Like, those aren't pulling despite an order hitting it and everything. So I don't think that those are just placeholders. I am kind of suspecting, though, that I maybe should just try and bail on this position because of how it built, you know. So I really don't like there being a click and everything and them going 2 ticks through it all at once. That's not good. Volume is also getting pretty light. Maybe a liquidity hole developing at 31.5. Yeah, this movement that we're seeing in the treasuries is a little sketchy, I think. Hmm. Well, that's not what we like to see at all. In fact, that's the sort of thing that could trigger me into a long. Oh, I see. The 30-year broke out to new highs there. That's why. That's why it was behaving like that. I should have stopped out of it earlier than that. That's okay. Three ticks lost on that. I think I want to buy into that liquidity at 11 at 0.0 half. Yeah, there's a iceberg there, and they get through it, but then somebody immediately sells it back down again. Getting a reasonable price if you want to buy yields, but I think what I'm getting from the flow so far, though, is that I'm not really very in line with the flow. Because that shifted back and it's got aggressive lungs, so it's very quickly surprised me, right? I think that the trade might be worth thinking about here, though. Shit. Okay. I'm worried about... So something just happened that made me think there's no way that's going to get filled now. But they did immediately afterwards go in and fill me, so now I'm like hyper suspicious about it. Still though, what I'm seeing is, even though like they're kind of moving back and forth here and everything a little randomly, right? But the flow is still much more aggressive on the long side. And they have generally added a little bit of liquidity to market, especially on the bid side. So that is some signs that there are still some large players at work here. Micro, so the 10-year is pulling back there, but the 30 is not. And so when we look in the micros, it's not getting back to that 414. If I wanted to take it live, I think that I would just have to plow into 13.5, or my gosh, 4135. Kind of a curious time to be seeing this too. Oh man, the 30-year is running. The 30-year is running. There's some, that probably was some stops there in the micros. S&P 500 is all of a sudden selling really hard. I'm not seeing a move in the dollar. Just in treasuries and the SPUs. But it is starting to look like a risk-off move. We are about to get oil stocks here in like 5 minutes, right? Man, what is there a piece of news that I'm not hearing about? Because that is really starting to turn a little wild in the SPUs. You know what? I'm not hearing my news squawk, so that's one thing. I guess I got disconnected. I'm just going back through here though. I don't see news. Not in the last few minutes. Sure seems like something significant is going on in the SPUs though. Think there's going to be a record oil production? Okay, E-mini has maybe found a temporary floor. Treasury is telling me I could have pulled off another tick at 0.5 again. And here's the 30 you're not backing off, and you have to hit into lows if you want to take it on the micros. So I was trying to get filled at 14, but no opportunity to get filled there. Suppose I could have done 13.5, but okay, what were those clicks? Movement in the S&P. Possibly flipping back down. Okay, not quite as positive about the bid at 0.5. Could probably still get easy fills there. There's a good few upticks there. New lows. I'm really tempted to chase because I can still kind of see the pressure. But I really feel like that the 30-year is already I've already kind of missed the best spot, so I probably shouldn't try it here on my live account. In fact, I'm just going to remove the temptation and put the safety back on. Because like I caught it okay here in the 10-year, but this one didn't give me the price I wanted. Okay, let's see. EIA crude oil inventories negative 4.63 versus an expected negative 1.6. So that's a big draw on the estimate, isn't it? Okay, Iceberg at 04. They pushed through it very easily. This is, yeah, I could have even done 13 probably. I'm kind of wondering if my theory was we are going to have a recession, and I was trading based off that, I'd be doing pretty good right now, right? I'm going to take a contract off there. Because it's doing a level break like setup, but I do not like the way it's doing it. In fact, I think I'll even take 2 off. That more than cancels out the loss that I had on the first one. So see there, they kind of went for it, but they didn't clear it and hit into the big order at 05. It's not your standard level break. That's kind of a little bit more like the sort of stuff that it does when it falters. But I wouldn't be playing against it. So it has been pretty, this has been pretty aggressive long flow. Yeah. Yep. Doesn't mean that the move is done, but I'm glad that I took some size off there. Heck, I might just take the last contract off too. Yeah. Okay. I'm gonna keep watching this because there could still be more today. When you get flow like that, you always got to start thinking trend day, right? That trend day is at least on the board. There's a pretty aggressive amount of buying too. 20,000 contracts along from the lows. Pushing to new highs. Yeah. Oh boy, oil just got creamed there. It's kind of funny to think that we got all the way to like 29 there. We could have taken it from 29. Wow. I don't know. Some of it is a little bit of the luck of the draw. Like, if you chase, sometimes you get enough of a little bit of something, you know? And that's certainly what happened in this instance. So I could have made $10, $15, but you can see why I'm, you know, a little weary about it. But I probably should be more aggressive if this is, you know, we're in a bull market. Because when they go bull in treasuries, man, you just get the wildest trends. Wow. Still seeing some aggressive orders getting filled here at 05 and 05 half. And the 30-year not backing off like one bit. No, they might settle back at 11, but for now they're just continuing to push. I'm not entirely sure what to make of this. It just looks incredibly strong for no reason. A big stack on 05 half when they fell down. There's the 30 years still going. Yeah, those bids look pretty solid. Like, before they were like 23s, now there's like 28s up there. There are big players involved in here. We may be getting a reprieve, though. Okay. So they're kind of settling back into a hole. Minutes left. I don't know, man. Feel like that I should be like wilding out at how crazy this market is, but I'm kind of like yawn about it for some reason. I guess because I missed my trades on the live account. Well, at the very least, I hope I talked somebody out of going short today. Right? Maybe we'll see another push up. I will bet you that we'll at least see an attempt, yeah. The problem that you kind of get is that because these flows are just materializing out of nowhere, you know, they could probably subside very quickly. Okay. Okay. So they're about to come back to the scene of the crime again. Find it so interesting how they have that tendency. You have a big breakout, pushes up, and then when they pull back almost exactly to where the breakout occurred. Maybe that's just me reading noise, but it sure seems to happen a lot. They're actually... If you wanted to get long at like 03, they didn't provide very much time for you to do it, did they? Now, I was not liking the prices that I was getting in the micros. So like, again, because it's the 30-year, because we're flattening and the 30 years, the one that's driving up here, it's making it very, very difficult for me to get a good position in the micros. It's way too late for me. I'm a little mad at myself for not taking more risks with this. I think the one trade that I took, the second trade that I took on Sim rather today at 0.5 wasn't bad, but I could have gotten much better, or probably could have gotten 11 and could have taken any number of trades on the way up to here. And I continue to sit on my hands now. I feel like it's too late for me. I am seeing like selling in the treasuries, but they're still up at the highs. So it gonna be like that, huh? That one's probably good for a tick right in there. Bill 06. Not quite 06 half. 1,000 hit, but they didn't pull. So. You took the entry at 04. 04 is probably okay. I think 04 is probably enough that you should be able to take a win off of it, but it's not like safe, you know, from it coming back. Like a 111 even is probably safe, right? Like I don't know if we'll see that price again today. MBO's at 10. How much do I care about that? Okay, there is a previous high from September there. So I think that that MBO may actually be significant. That doesn't necessarily predictive. I think that we want to think when you got targets like that out there that they will go out and get them. We don't actually know that. I should probably change my DOM so that you can see more prices. There you go. Okay, well, they're maybe suffering a little few setbacks at 06, so. Can you go over what trapped buyers and seller means and what it looks like on the DOM? Well, okay, so if we were to look at cumulative delta, for instance, I'm not going to say that this move was driven by trapped buyers or sellers, but you can kind of see this thing where, okay, we had the news and it moved up, and then we pulled back to here. Let me draw that with the clear pen. Had the news, then pull back, okay? You can see the amount of selling there on that, right? Didn't move it nearly as far as the buying did it? So now what's happened is the buyers took things again, and the buyers are incredibly aggressive, and so they pushed it very, very far. So basically, anybody that had picked up a short position within this area is screwed. And they are what we call trapped. They want to get out at a small profit or break even or whatever. They want it to come back. It can't. And so they have to get stopped out. So they're going to buy it. And so some of these guys may end up becoming some of these guys. And that's what they mean by trapped buyers and sellers. Now, if you were to talk about like how does it look on the DOM, I think that generally speaking, when you're talking about trapped buyers and sellers, you're looking at like aggressive orders. So, similar to what we're having right now. I'm not so sure that these are trapped buyers and sellers. I think that there's just a really aggressive buy out there in general. Okay. But, you know, this is where you're going to see them move 2 ticks at a time. Even if there's an iceberg there, they fill the iceberg and trade through it very, very quickly. You'll see market makers very weary about holding offers out there. So they'll pull very quickly. You know, those are the sorts of things. But bigger picture, I would say that I think that retail traders in the order flow community worry about, quote, trapped traders too much. So when would trapped traders matter? Because I think that right now, the only thing that matters is that we're getting some weak economic data and that the markets are reading this as very, very positive for treasuries. And you're seeing a lot of momentum of them getting long into this. And that's what's driving this flow, okay? when you'd be worried about trap traders is like, you know, when something else isn't actually going on, and it's like these trap traders are going to cause this break to the upside to accelerate a little bit more than it usually would, or something like that, right? It's just not as good of a trade. I think the best trades that you're going to get are going to be ones where there's a move up and then something happens that completely contradicts that move up. You're going to get this sort of a thing. Those are the best trades. That would be like, man, what would be the most bullish thing that you could possibly say right now? Federal Reserve decides to stop quantitative tightening or something like that, right? Now, that wouldn't cause the treasuries to sell. What would cause the treasuries to sell? Oh, okay. So what if at this exact moment, Jerome Powell, or it wouldn't be Jerome, it would be Nick Timros. Nick Timros comes out saying, well, we're in the blackout period, but I just got some sense from Federal Reserve members that they're actually thinking about doing a rate increase next Wednesday. Okay. This market would sell. Okay. But because of how crazy the buy was, this sell would be even more nuts. Those will be your biggest trades. Probably not going to happen today, though. Right? Probably won't happen today. They could also be swing positions, so I don't think they'll just close after a few ticks against them. Oh, the ones that we're selling? Yeah. Well, you know, like, just for example, I did take I was concerned that this data would be strong. I was concerned that this data was strong, and I saw that protection was cheap, so I just bought a little bit of protection. So it's $100. Is not a big deal. Clearly didn't need it though, right? But I'm okay losing that money because like the risk reward for me was so worth it, right? If any of these numbers had ended up being better than expected, we could be selling just as hard the other way, right? So yeah, you got to remember, like, this is the whole thing, is that like, who really moves these markets, right? If the Bank of Japan is coming in and buying treasuries, it don't matter. Doesn't matter how many of you retail traders are trapped, because the Bank of Japan has 10 times that amount that they have to buy. Right? And that's who I would try to be more focused on. Because basically, or let me put it this way. Trading is not about following other people. There's this idea that I'm going to watch what everybody else is doing, and then I'm going to make all of my decisions from that perspective in response to them. Okay? There's a big problem with this strategy because you're always reacting. You're always reacting in a market where we know that your actions can move the market and change the outcome. So wouldn't you rather be the person that's acting? Okay, well, you probably don't have enough size to really move the markets, right? But I would still take the approach that like that you are. Pretend that you're the big fish and everybody's watching you. When are you going to trade? Because you know that if it's like there's a bunch of retail traders and they're all going short, and so then you come in and you buy it to try and stop them out or whatever the deal is, but they can all see that that's what you're doing, right? They're going to hold on. They're going to hold on and they're going to add some size and they're going to try and wash you out because you have the money and they want to screw you over, right? So if you're a smart big fish, you're not going to put yourself in that vulnerable position, right? You're going to only take a trade when you think that you have a really good edge. And it doesn't matter what all of the locals are going to do, because ultimately you know that you're going to make money. You know that the jobs number on Friday is going to be weak, or that the buying in the Treasury is going to continue just because, right? Like, you need to have like a really strong reason to be getting into something that is not just, well, all of the other traders did this. Because if you're just reacting to all of the other traders, you're the big fish. There's nothing else going on. What's going to protect you from them noticing that you did that and then trying to squeeze you out? Right? So that's why I don't put as much emphasis on these kinds of strategies that are like trapped traders. What do they call these things? Liquidity grabs, these sorts of things, right? I would prefer the rest of the market be reacting to me rather than me reacting to the rest of the market. That's puts you more in control, right? I guess if Pal said, "Hey guys, I opened a big short position in ZN," I think odds would be pretty good for a short. Yeah. A good one, Dewey. They're coming back to that lower end of that range again, so it's probably going to moderate from here. How much further back they get? You think they will see 111 again? But anyways, so think of it. What do you know that's actually going to drive the orders? Right. I mean, think of trap traders as just a sweetener, right? Well, I know that they're going to buy it. It's the CTAs, they have to buy it, or whatever the reason is. I don't know if I really have that today. Probably I should because it's moving, right? But then I see trap traders, right? That's just a sweetener. That just means it's going to be that much more aggressive when it goes, when the flow that I expect comes through. Because I know that they're going to come and they're going to buy it no matter what. That's the sort, right? Price insensitive buyers and sellers. There's still a decent amount of activity in there, but it's not the same kind of people throwing their weight around that we had before this latest move up. And what about ZB? ZB has definitely had enough downside here to be like a what would you call it? A swing high of sorts. Man, when you look at that move in ZB, it really is like, man, why didn't they? So the thing was, there was news at 8 o'clock that I had missed, which was a Bank of Canada rate decision, which is in line with expectations. And they kind of sat around for about 10 minutes, and then this bull run started. So perhaps this was a large meta order to buy that was just waiting for it, because usually those guys, they don't start executing it immediately after the news, right? They wait 5 to 10 minutes for the market to be like, okay, and then they make the move. So that's maybe one thing that we can probably glean from this. And if that is the case, it probably has to do with the same things that's been driving this rally the whole time, which is that the economic data looks weak. And that the Fed, we're very clearly past peak rates. Don't think that we're going to get 5 rate cuts next year like they're saying, but we're probably past peak rates. Unless we're going to have a recession. What do you guys think? Oh, it's too late. We'll do a poll tomorrow. Maybe we'll do a poll Friday. Let's let all of the data come out. We'll do it before the Federal Reserve, though. All the data, and then we can have a vote on, do you think there'll be a recession in 2024? All right. I really wish that I had participated on this move, though. It's kind of funny. Because I was not in line with this at all, right? Because it came down there. It came back up a little bit. I think it was 111 where I started to go, oh, this is a good place for a short. So I started building a short. Didn't work. Stopped out of it. Reversed. And I reversed because all of a sudden the orders started to get aggressive. When I started to see the orders get aggressive like that, that's not supposed to happen, right? If you're trying to execute a large meta order, you don't want that to happen because that just starts to move things against you. So when I start to see those signs, that's kind of like, okay, maybe we are going to go this way. So that allowed me to flip. But I just wasn't able to get a good price here in the micros, and it looks like I, missed out on $20. So it kind of sucks. Like this should be my market. This should be, but I just don't like what they're doing, and this happens to me too much. If we get the same thing tomorrow, I've got to be on it, right? And especially if we get on it on Friday. Although, you gotta be careful. Could be that like the data is weak on Friday, but it doesn't do what we expect on Friday. And there's next week. And maybe next week we could short the evening. Anyways, I'll see you guys tomorrow. Stay excellent.